Hello and welcome to the Microlearning Institute. In this tutorial we look at question 1 from the AIA paper 13 sitting from November 2013, and this question is called GECO. And in this question we're asked to prepare GECO, the GECO Group's consolidated statement of financial position as at the 31st of October 2013 in compliance with IFRS. Now again, the GECO Group comprises 3 companies: GECO, Reddit and CEF, and we're given acquisition details and other details along the way. So firstly, let's look at the fair value net assets of Reddit at acquisition. And of course we're told in the question that Reddit's ordinary share capital is 54, the retained earnings at acquisition were 43, and we're also told that the fair value of the net assets of Reddit at acquisition was 162. And again, by a balancing figure we can conclude that we need a fair value adjustment of 65, and in the question we're told that this relates to non-depreciable land. Now let's look at the fair value of the consideration for Reddit. And the fair value of consideration is made up of cash, $135 million. There's also a contingent payment whose fair value at date of acquisition is $5 million. So the total fair value consideration is $140 million. Again, we're told about fees, administration fees that are incurred in relation to the acquisition, and of course these are not included in the carrying amount of consideration for subsequent measurement of goodwill. Instead, any fees that are incurred at acquisition of Reddit are expensed to P&L in the period. Now that we know the fair value net assets and the fair value consideration, let's look and calculate the goodwill in Reddit at acquisition. So again, group policy is to calculate goodwill in the non-controlling interest at fair value. So again, we know that the cost is 140 for the group's share, and we're also told that the non-controlling interest measure at fair value at the date of acquisition is $41 million. Again, we match the group share, which of course is 80%, is what we acquired, of the fair value net assets of 162, giving us 129.6. So consequently, goodwill of $10.4 million is recognized in the group. Similarly, when we match the non-controlling interest share of 20% of the fair value of the net assets of 162, we recognize $8.6 million of goodwill in the group. So total goodwill of $19 million recognized at acquisition of Reddit. Next up, let's look at the fair value of the net assets of CEF at acquisition. Again, the fair value net assets is made up of the ordinary share capital of $5 million, retained earnings is $42 million, again fair value net assets is $52 million, so again we who are preparing the group accounts need to recognize a fair value adjustment in relation to the carrying amount of CEF of a balancing figure of $5 million. Now that we know this, we can again proceed and calculate the goodwill in CEF at acquisition. Again, we know the cost was $15 million. We purchased 25% of the fair value of net assets, giving us $13 million. So goodwill on initial recognition of CEF of $2 million. Now, we're told in the question that we're now going to up our percentage in CEF by 35%. So again, that will take us from 25% up to 60%. And the process with respect to IFRS 3 to do this is firstly we de-recognize the associate, and then we remeasure it at fair value as part of the fair value consideration for control of CEF. So firstly, let's look at how we de-recognize the associate. So at the date of conversion to control, the 31st of July 2013, the ordinary share capital of the associate is $5 million, reserves are 56, and the fair value adjustment, you might remember, in relation to acquisition is $5 million, giving us a fair value net assets of S at the date of derecognition of the associate of $66 million. Of course, we, the group, only owned 25% of this, and of course you'll also remember that when we acquired it, we recognized goodwill in the associate. So goodwill of 2, so consequently the carrying amount of S at the date of derecognition of S our associate relationship in S, was $18.5 million. The fair value at derecognition, we're told in the question, is $21 million. So if the carrying amount of S at derecognition was 18.5 and the fair value is 21, that leaves us with a gain on derecognition of the associate of $2.5 million. And of course later we'll see that gain going to reserves. Now, we're now going to acquire control of S. Okay, so we're going to cross the control threshold. Initially we owned 25%, now we're adding 35%, so our overall holding will be 35%. So we've remeasured the associate fair value and we've recognized the corresponding gain, and now we're going to acquire. So firstly, let's look at the fair value net assets of S at acquisition of control by GECO on the 31st of July 2013. We're told ordinary share capital is 5, retained earnings at that date is $56 million, and the fair value of the net assets we're told in the question is $68 million. Consequently, again, we can recognize a balancing figure, a fair value adjustment in relation to non-depreciable land of $7 million. Now we can calculate goodwill in S. Firstly, let's look at the consideration. So firstly, we paid $29 million in cash to acquire the additional 35% holding in SEF. However, additionally, we're also deemed to give as consideration the fair value of the 25% holding in S that we already held. So we're giving the 25% holding and some cash in order to receive a 60% holding. So our total cost is 29 plus 21, which is 50. Similarly, we're told that non-controlling interest at the date of control is achieved by the GECO group in SEF is 33. Now we match the group share. Now the group share has gone from 25%. The group now controls 60% of the fair value of the net assets of SEF. And of course the fair value of the net assets on the date that control of SEF was achieved is $68 million. So consequently, goodwill of $9.2 million is recognized in the group. Similarly, goodwill of $5.8 million is recognized in non-controlling interest at acquisition, and that gives a total goodwill of $15 million in SEF with respect to the group. Next we can look at property, plant and equipment, and we're told in the question in note 4 that GECO purchased production equipment for $27 million on the 1st of November 2010. In addition, during the year ended the 31st of October 2011, direct costs attributable to bringing the equipment to a working condition and testing that it was functioning properly were an additional $5 million, and the net proceeds from selling prototypes produced during the testing was $2 million. The equipment began full production on the 1st of November 2011, and the expected useful life is 10 years. We're told that on the 31st of October 2012, the equipment was revalued to $32 million, and on the 31st of October 2013, changes in GECO's technological environment were noticed, and an impairment review suggested that the equipment's recoverable amount was $21 million. Depreciation for year ended 31st of October 2013 has been based on the equipment's revalued amount. No other adjustments have been made. So let's look at the entries for property, plant and equipment in the consolidated accounts. So firstly, we spent $27 million on it, but there were additional direct costs. Now we had proceeds from the sale of 2. So on the 30th of the 10th, 2011, the carrying amount of property, plant and equipment was $30 million. We charged depreciation over the useful economic life of 10 years, so that the carrying amount at the 30th of October 2012 had reduced to $27 million. Now, at that date, the equipment was revalued to $32 million, and consequently we recognized a revaluation gain to other comprehensive income and other components of equity of 5. Our depreciation was based on the revalued amount over the remaining useful economic life of 9 years, so a depreciation of 3.6. So on the 30th of the 10th, 2013, our carrying amount of property, plant and equipment was 32 minus 3.6, which is 28.4. Now, the recoverable amount at that point was deemed to be $21 million. Now again, You will remember that IAS 36 tells us that we cannot carry an asset at more than its recoverable amount. So consequently, we had to recognize impairment. And in this case, impairment is 7.4. And again, the impairment initially eliminates the previously recognized revaluation gain of $5 million and any additional impairment, and again 5 and 7.4, the additional impairment is 2.4, is treated as an expense in the period to P&L. Next, let's look at the treatment of a financial asset. And in Note 5, we're told that GECO's financial assets include a debt instrument purchased for its fair value of $20 million on the 1st of November 2012. The instrument has a principal amount of $25 million. Fixed interest at 4.7% is paid annually and has been included in profit and loss. The instrument's effective rate is 10%. So let's look at how we account for that. So initial recognition, of course, in line with IFRS 9, is going to be $20 million at fair value. The interest charged at the effective rate of 10% is 2, and the cash flow is 4.7%, which of course is the interest, the coupon rate of the instrument with respect to the $25 million, which is the principal amount of the instrument. So the cash flow is 1.17. So consequently, the carrying amount of this financial asset on the 30th of the 10th, 2011 is $20.82 million. Now, the carrying amount in the actual accounts, we're told, is that its purchased value of 20, so consequently we need to make an adjustment to the carrying amount of the asset to increase it by $0.82 million. And again, the adjustments there is we'll debit the financial asset and credit reserves. Now, let's look now at the fair value movement regarding the investment in R or in Reddit. Okay, so again here we're looking at the individual accounts of GECO, and we see that GECO paid $135 million for its initial investment in Reddit. Professional fees of 1. So again, from IFRS 9 as applied, the financial asset that is Reddit was initially recognized at fair value plus transaction costs on the individual accounts of GECO at 136. The fair value, we were told, on the 31st of the 10th, 2013 is 149. So consequently, in the individual accounts of GECO, we've recognized a gain in relation to the investment in Reddit of $13 million. And of course, this gain must be reversed on consolidation, because of course when we consolidate the entire assets and liabilities of Reddit into the consolidated accounts. So to also consolidate the gain made by Reddit's shares in the individual accounts of GECO would be to double count the return from Reddit. So the individual accounts fair value gain in line with IFRS 9 will be reversed on consideration. Similarly, in the independent books of GECO, the investment in CEF, and again it cost us for the 25%, it cost us initially $15 million. We purchased an additional 35% for $29 million, so the total cost was 44. And again, the fair value at the 31st of the 10th, 2013 is $51 million. So the gain of $7 million in the individual accounts of GECO again will be reversed on consolidation. Now, let's look at the joint controlled operation. We're told in Note 3, that on the 1st of November 2011, GECO contributed 30% towards the $50 million construction cost of an audio research facility. The facility was completed on the 1st of November 2013 and is expected to have a useful life of 15 years. GECO accounts for this investment as a jointly controlled operation, but so far has only accounted for its share of the construction costs in its financial statements. During the year ended the 31st of October 2013, the facility sold goods with a direct cost of $40 million for $70 million. And the facility's executive team are to be paid a lump sum benefit on termination of service equal to 1% of the final salary for each year of service. Their combined salaries in the year ended the 31st of October 2013 amounted to $1.3 million, and the present value of the obligation was estimated at $1 million at the year end. The facility's other operating overheads during the year were $10 million. So now, in line with IFRS 11, let's look at how we treat this jointly controlled operation. So again, in terms of property, plant and equipment, the cost that we initially recognize is 30% of the 50 million, which is what we contributed, and the depreciation that we recognize over the useful economic life of these assets is with respect to that 15 million, giving us property, plant and equipment with a carrying amount in relation to the jointly controlled operation of 14 million. Similarly, with reserves, we can recognize 30% of the revenue that's been earned, matching that with 30% of the cost of goods sold. We can deduct from our revenue the depreciation that we've just recognized, and also take 30% of the present value of the obligation in relation to pension benefits. Also 30% of the overheads, leaving us with a net profit to reserves in relation to the jointly controlled operation of $4.7 million. Now we've dealt with all of the adjustments and all of the group issues, so now we can prepare the consolidated reserves of the GECO group at the 31st of October 2013. So again, starting with the individual company accounts, where we see the reserves of 190, 72 and 65 respectively, we recognize the fair value adjustments at acquisition in both Reddit and CEF, and of course they were non-depreciable, so they still sit there as adjustments in the group accounts at the 31st of October 2013. The professional fees which were incurred on the acquisition, we expense those to P&L. The fair value through profit and loss of R, so this is the gain that was recognized in relation to Reddit through the individual accounts of GECO, needs to be reversed, as does the gain that was recognized in the individual accounts of GECO with respect to CEF, must also be reversed. We recognize a share of associate, and again the share of profits in associate. So the associate, when we acquired it, had a profit of 42, or had reserves of 42, and they have increased to 56. So 25% of that has been taken to the P&L of the GECO group and is consequently recognized in reserves. The derecognition of the associate, you remember we made a gain on remeasurement to fair value of the carrying amount of the associate, and that's recognized in reserves. The impairment in relation to property, plant and equipment, also recognized in reserves as an expense. Jointly controlled operation, the 30% share of the net profit of the jointly controlled operation, and the financial asset, again being adjusted by $0.8 million and the corresponding adjustment in reserves. So our updated figures in relation to the reserves of GECO, Reddit and CEF, when viewed from a group perspective and incorporating the additional items that had not been accounted for, gives us those updated figures. We now need to consolidate these updated reserves, and of course our principle for consolidation is that we consolidate the holding company's reserves entirely plus the group share post-acquisition in any subsidiary. So the holding company's reserves is GECO, consolidates entirely at 178.1, and now we add the group share post-acquisition in Reddit, and the group share is 80%. The updated reserves we've just calculated at 137, and the reserves at acquisition were 108. So 23.2 million consolidates from the post-acquisition reserves of Reddit, and similarly our shareholding of CEF is 60%, and the movement in reserves since acquisition of control of CEF is from 63 to 72, thus 5.4 million consolidating, giving us a value for consolidated reserves at the 30th of April 2013 of $206.7 million. Next, let's look at our calculation of non-controlling interest. And again, we know that we must look at the fair value of the net assets of both Reddit and CEF at the 31st of October 2013 and allocate the non-controlling interest, their share of those fair value net assets. So again, the fair value net assets of Reddit and CEF is made up of ordinary share capital plus the updated reserves that we've just updated from the previous working, plus so consequently the fair value of net assets is 191 for Reddit and 77 for CEF. Now, Non-controlling interest in Reddit is 20%, and of course in CEF is 40%. And of course goodwill in the non-controlling interest has been recognized at acquisition and still sits there in the non-controlling interest of both Reddit and CEF. So consequently, the non-controlling interest of Reddit at the 31st of October 2013 is $46.8 million, and the non-controlling interest of CEF is 36.6. Consequently, we'll be recognizing a total non-controlling interest liability on the consolidated statement of financial position of GECO of $83.4 million. Now we can compile the consolidated statement of financial position for the GECO group at the 31st of October 2013. So on the asset side, we have property, plant and equipment from the individual entities, plus the fair value adjustments of 65 and 7, plus the 14 in relation to the share of the jointly controlled operation, and of course less the impairment of 7.4 of property, plant and equipment. So our consolidated property, plant and equipment is $590.6 million. Similarly with goodwill, we have the goodwill in both Reddit and CEF, which consolidates at 34. The financial assets, we have control of the financial assets of GECO, Reddit and CEF, plus the 0.8 adjustment that we made in relation to the carrying amount of the financial asset. So financial assets consolidate at 78.8. Current assets, jointly controlled operations, accounts receivable needs to be included there in addition to the individual current assets of GECO, Reddit and CEF. So current assets consolidates at 89 and total assets consolidates at 792.4. Now we can look at the other side of the statement of financial position to look at the total liabilities and owner's equity. The ordinary share capital, of course, is the ordinary share capital of GECO only. The reserves we've just looked at from a previous working consolidate at 206.7. Other components of equity, and again we recognize other components of equity on the individual statements of GECO, and of course we have an impairment to other components of equity of 5 coming from our earlier working. So that gives us a consolidated other components of equity of 25. Non-controlling interest from the working is 83.4. Non-current liabilities also includes jointly controlled operation pension of 0.3, consolidates at 235.3. Current liabilities, as well as the current liabilities of the individual entities, we have the contingent consideration of 5 million. We have the jointly controlled operations liability for cost of goods sold of 12 and also for overhead of 3. So our total liabilities and owner's equity consolidates to 792.4. Thank you very much for watching this tutorial from the Microlearning Institute in relation to question number 1, GECO, from the AIA's paper 13 from November 2013.